Thanks, Ted, for coming in today.
No problem.
Firstly, it might be just good to understand what exactly is impact investing, because there's some confusion in the uninitiated as ESG, SRI, impact, what it all means.
Quite right. So impact investing as a term is relatively new, but it basically describes positive screened investing. So the key difference is thinking about what the companies actually do, the products and services they provide, and do those products and services have a positive impact? And that's really where we look with our investment strategy around impact. The alternative, of course, environmental, social and governance investing, you care less about what the company actually does, that's less important, and what you're interested in is how they do it. So you think about their value chain. But impact investing is really thinking about what the company's largest impact is, and that tends to be what they actually do.
WHEB is a relatively new entrant in the Australian market. But how long, you've been going for longer than that, so it might be good to get some background as to how long you've been running money this way.
Certainly. So WHEB is an independent boutique that has got a strategy in the UK which is the mirror of the strategy that's available here in Australia, and that's been going in this form since 2012. The strategy itself predates that. It was launched in 2006 inside Henderson Global Investors. It was called the Industries of the Future strategy, and for various reasons we were the pioneer then. There hasn't been an awful lot of product following us even in Europe until very latterly, so we really are kind of an originator and a pioneer in impact investing, and now the product's available here in Australia as well.
And it might be good to understand how the team came together. Are you all ex-Henderson, or how did that work?
So actually it's a combination of 4 ex-Henderson people left and joined us in 2012. I was one of the original founders actually of the pre-existing WHEB strategy, which was a copycat of trying to be another Industries of the Future fund, because we thought it was such a good idea that the market could support more strategy in the impact space. And as I've perhaps already mentioned, it's very striking. Impact's become much more popular in really the last couple of years, and we were sort of out leading the way from before that.
Yeah, it was interesting. I had a conversation with someone yesterday. So what do you think's been driving that more recent renaissance?
It's a good question, isn't it? Why it's suddenly become so important. I mean, part of this is probably a gradual approach, and actually ESG investing has really grown since about 2012, so that maybe made the ground a bit more fertile for people to think a bit harder about sustainability and about impact. Partly it's also been crystallised by a lot of stuff that's been going on in the private equity world, and there's been a real increase in impact strategies in private equity, which really captured the imagination. I think part of it too is actually, like so much in modern economies, related to data and the sort of data revolution and improvement in communications, and people in every walk of their life now expect to be able to have information and understand in detail kind of every aspect of their life, whether it's monitoring your fitness through a fitness watch, or whether it's getting real-time updates through social media of what your friends are doing. And I think, in a way, impact speaks to that too. So people have decided, if you've decided that your capital matters to you where it's invested, then you want to understand more about the impact, and it really encourages people to engage with what they're investing in, and that's perhaps why it's grown up.
Okay. And the companies that you're investing in, given that you said some of this, I'm wondering whether some of them are coming out of venture capital, private capital, and to listing stage, because you're focused on public markets.
Well, it's absolutely a public market strategy. We have a sweet spot of where we invest, which is kind of the mid-cap space, where the company has a proven technology which solves a sustainability challenge and has a positive impact. We're trying to get them through the most interesting growth stage. But absolutely, as you say, as the world pivots towards sustainability and faces the sustainability imperative, more and more companies are out there now who really specialise in things which are providing solution. And that includes a lot of smaller companies coming to market at the IPO level. We tend not to go down too small. We've only got 3 names in our portfolio which are under $1 billion in market capitalisation. But that's plenty big enough to get some good companies coming through with some interesting ideas, and it's absolutely a growing market.
Yeah. So it might be worth describing your process. It sounds like it's pretty bottom up. Yeah,
I mean the sort of overarching philosophy really is to try and take sustainability and identify the strong sustainability drivers, and then deliver that to the equity holder as cleanly and in sort of a concentrated form as we can. And so to do that, the key part from us sort of philosophically is to take some of the company risk out of it. So we are unashamedly quality investors. We find companies that provide a solution to a sustainability challenge, are tapped into a really good growth trend as a result, and we just want them to just do their thing over quite a long time period. We've got quite a long horizon, say we think about 5 to 10 year investment investment horizon, which is backed up by our statistics, and our numbers show that that's how long we invest for. So yes, it's a quality focus. That requires a lot of quite old-fashioned kind of company analysis. We've got a team of 4 analysts who are all very experienced and know a lot about sustainability as well as about companies. And the focus really is getting to understand management, getting to understand the pricing power and the dynamics of the industry the company's in, looking for barriers to entry, and really understanding why, in most of the cases of the companies we invest in, they've got superior returns. So it's a real sort of quality overlay to the strategy.
Okay, so it sounds like it's embedded throughout the process rather than having, I guess, an expert in one particular field and combined with some fundamental analysts.
Yeah, thank you. That's a very good point to make up, because we do think about impact. Integration is the key word. We think about impact inside the investment team. We look for the companies with the strongest impact. We think that's where the biggest growth opportunity is, and that underpins what the strategy is. We also do think about environmental, social and governance factors, the way the company manages itself and thinks about the long-term sustainability issues. If you're a long-term investor, those issues are critical anyway, and you should definitely be looking at the information that you can learn from the way management team thinks about these things, so we do that as well. And then obviously it's the same team which have the financial skills for the more conventional financial analysis, which are integrating those points as well. So it's really the idea is to try and do it as kind of as purely and as integrated as we can be.
And maybe going to stock, I guess, or sector specific, EV and Tesla. What do you think? How do you think that's going to play out?
Well, absolutely. I mean, that would be Tesla would be a great example of a very high impact story. So something that we are naturally attracted to. It's also, as a result of its extremely high impact, got a very profound opportunity set. And you can see that with the success of the Model S, that they managed to disrupt particularly a category of car which the Mercedes S-Class had been so successful in for so long. So really tremendous impact. And in terms of what they've achieved in moving the world towards electric vehicles, it's very, very profound. And we like that very much from a sustainability point of view. From an investment point of view, it's clearly a business with a very high capital demand. As a first look, you're immediately going to say this doesn't fit the kind of cash generative, high returning business profile that we like. It's got one of the things which makes the Tesla story work is it's got an almost cultish following amongst money managers in the US, which is fantastic from the point of view of Tesla trying to get the vehicles out. But from an ordinary investor sitting as we do in London, it just seems like the equity's been bid up enormously. That has been the case now for a number of years. What's probably going to happen just now is the rubber will hit the road in the next quarter or two. It's already sort of starting to happen with the bonds coming off to sort of 85 cents. Tesla needs to prove that it can deliver the Model 3, which is the current variant they're working on. And if not, then I suspect there'll be a problem with the equity there.
Right.
So that's love the impact, can't get on board with the equity story.
Yeah. So given your impact philosophy, what does that mean in terms of the themes that you might be investing in the portfolio?
Okay, so providing a solution to a sustainability challenge, which is what our companies do, actually covers huge parts of the economy. It's a really profound change which touches lots of different bits of the economy, bits of industries. The thing about our strategy, which perhaps a little bit different to some of the other strategies which have been established for a while, is that we really think the human being is critical to sustainability. Sustainability is about the sustenance of human life, the maintenance of the quality of life that we all enjoy and that everyone should feel entitled to. So we invest not only in environmental themes, which might be what people quickly think of when you think about sustainability, but we also have social themes as well. So the social themes are health, well-being, safety and education. Our environmental themes are things like cleaner energy, resource efficiency and sustainable transport.
So in terms of where we're at now in the cycle, what's working now in terms of your themes and what are you looking at?
Yeah, so we spend a lot of time thinking about which of the different sustainability sort of drivers are really working at the moment. And broadly speaking, there's a lot potentially, because there's a lot of change going on. In our portfolio of 60 stocks, we tend to have about 20 sort of drivers at any time, often with a couple of stocks facing that same sustainability theme. In every case, what we're looking for is superior growth. So really we're looking for high single-digit or double-digit organic growth in the market that the companies can capture. The things which are working very well for that at the moment are resource efficiency theme, lots of things about advanced manufacturing, which is applying information technology to the factory floor to reduce material wastage, reduce energy use. That's a theme that's got a lot of interest in it. It's got a lot of good performance in it. Sustainable transport, there's a big transition from internal combustion engines to electric vehicles, and there's all kinds of ways to play that, which are sort of lower risk than Tesla, which are interesting to invest in. In water management and environmental services themes, there's a lot of climate adaptation at the moment. I think everyone who's either in the UK, where we've had some extraordinary weather, and here in Australia, is aware that we're getting real changes to climate patterns, and just coping with that is something which you can definitely get an investment opportunity from. And in the health theme, the big theme at the moment on the sort of social side is cutting costs in healthcare, because healthcare has become sort of unsustainably expensive. So that's a real area of focus for us. So these are some of the examples where you've got that superior kind of high single digit, and double digit growth rates that we're trying to tap into for our investors.
And lastly, something that's been topical in Australia this week is China being more restrictive in the recycling waste that they're going to take. Is that flowing through to
Absolutely. It flows through to all of the companies in the recycling value chain in Europe as well as Australia. It's actually generally, we think, relatively positive, because it's putting a bit more pressure on the need to find sensible, sustainable solutions to disposing of plastic waste. So from an environmental point of view, it's quite interesting. Which business models it works for depends slightly on who's got the assets and who can actually deal with that waste. But that's a really great example of the kind of sustainability issue which produces opportunity if you know which companies to look at.
Okay, great. Thanks for your time, Ted. That's been great.
Thank you, Libby. Cheers.